Market comments for 2009. It's now between Christmas and New Year in 2008. And if we are looking ahead towards 2009, what can we expect? Well, the housing crisis is still just getting started, really. It's going to last for another year or two at least. And I also predict that the economy is going to struggle with the housing crisis. We really initiated this recapitalization of capital assets. And I wrote that in my November 2007 article on LouRockwell.com. And I still believe that the earliest recovery could be sometime 2011, 2012. 2012, of course, is the London Olympics and the Summer Olympics in London. And that's when maybe we'll see some signs of a recovery towards the Olympics. But I don't think we'll see much before that. So capital assets will continue falling, or at least that will be the major trend. Because what people are in great danger of being exposed to right now is a bull rally in a bear market. And we've seen that kind of this fall, and November, December has been like that. Now it's fallen down a bit again. But I would not be surprised if the market would rally, because there's still a lot of potential money out there that could be put into the market, and there's still credit lines that are open, and there are also people that are desperate, companies that are essentially bankrupt, and then they go for double, instead of just going into a bankruptcy, they take whatever money they have and they just put it on black or red and go for double, and if they make it, they're on top of the game again. So weird stuff can happen. So if there's a boom, I would be very careful about getting into it. I would say if there's a boom during 2009, it's most definitely false. A boom in 2010 might be the real thing, but probably not even that. So if you see a boom in 2009, don't throw yourself into it, because it will reverse dramatically, and there's no way of telling when it will reverse. I will say, though, that if the boom is strong and takes the Dow Jones above 10,000 again, and maybe up towards 11,000, and then it will be a new opportunity to short the market. And I will be watching that closely and telling you here on the channel and on my blog at farman.no, the main site. Excuse me. So watch out for this boom, because this could come very unexpectedly and look dramatic and look like a reversal, but it won't be. It will be false. So rather, what we'll see in 2009 is that the bond market and interest rates in the U.S. might actually turn around. Right now, there's this huge flight to safety, and people are buying U.S. bonds, long-term and short-term, just as a safety precaution, and moving their money into that. And of course, they've been selling assets in the third world and the developing world, and pretty much any other market than the U.S., and pouring money into the U.S. and we see this amazing rally in the dollar and all that. That could very well change in 2009, and we'll see a fall in the dollar. I called that top of the dollar now in December. Still hasn't really started the fall that I expected, but I would say it's very risky to play a game where you expect the dollar to rally more now. I believe it's pretty much reached the top, and from now on the right strategy is to diversify into a diversified cash position in different kinds of currencies. And my favorite main currency is the euro, because I know that the European Central Bank will fight inflation quite hard before they give up. They will give up eventually, but they will fight it much harder than the U.S. Fed can do, because the U.S. economy is doomed. It's just a matter of time before the dollar will crash and basically destroy itself. And 100 years from now, there's not going to be a dollar anymore. There's going to be something else. I don't know what it's going to be. It's going to be local currencies. There's going to be fractured into many different kinds of payment systems, and maybe there'll be a California currency and a Florida currency, a Chicago currency, and so on. It will happen much before 100 years, but just to put things in perspective, this is not going to last. whatever has to break will eventually break, and the dollar will break due to all the debt that the U.S. government is piling up. So we'll see a relative decline of the U.S. on the world scene as well. But the U.S. is still the most dynamic place in the world, and with a lot of great people. So we'll see amazing stuff from America. It's not like America is going to end and that's the end of it. We'll see great stuff from America. And also the bust that comes now will create a different mindset that will set the tone for the next 10 years, come 2010. And the tone of that, those next 10 years will be come from California, like everything else. California is the cultural trigger that brings about change, and whatever comes from California, there we'll probably see the early signs of this very soon. And I believe things like alternative lifestyles and yoga and poison-free food and more focus on home and family and all that. That's going to be a trend that will come out of California in this bust and will spread towards the rest of the world. So also this with fuel-efficient cars and electric cars and all that, it's pushed through by legislation in California, and it will go like a influence like everything else from California across the world. Now, back to 2009 and how this is going to change. So it will be an opportunity to play the game with the dollar reversal, and interest rates are going to shoot up again, and people are going to realize that this economy in the U.S. is pretty much doomed. It's going to have to change dramatically, and it's going to get a lot worse before it gets better. And that's when these interest rates that are now at 0%, people are flighting to safety on short paper, so basically getting nothing, just a little interest rate, and pretty much for all practical purposes placing money and lending it to the U.S. government without getting anything back on 3 months basis. And that will eventually change, of course. People will not perpetually lend their money and have someone borrow their money at no interest. So eventually that will change. The price on U.S. bonds is going to change then. It's been a rally. Basically, the last boom right now is in U.S. bonds, and that's going to change. And I believe that will change in 2009. And that is also going to trigger the rally in gold. But before the gold rallies, we might still see a sell-off, because the worst in the financial crisis is not yet upon us. So I'm not ready to call buying gold right now. I'm still holding out for a reversal that might be there. I'm invested in gold, and I hope you are too, because I've been recommending that for quite some time. But getting more heavily into gold is something I'm hesitant to do right now, because I think it might fall before that. But I might also change my mind and say that, okay, this great reversal has now begun, so get yourself more into gold. Maybe the price that it's right now, it's at $830 or at an ounce, and it might be at $900, $950, maybe $1,000 even. And I'll change my mind and say that the risk of the gold falling back again has now been reduced so much that I think you really should get in. But right now, I think the risk of it falling back to 600, even 500, is there. So I'm not ready to recommend going into gold. So what I recommend, again, it's not that exciting to do that, but it's a diversified portfolio of different kinds of cash or cash instruments like bonds. And putting your money into insured bank accounts, not making sure that you don't have more money in any one bank account than is insured by the government insurance agencies around the world, and waiting for the right opportunity to do something. You shouldn't do something before you see something you really believe in and then you can get into. These are my market comments now for before New Year, and do subscribe to my channel right here. Press the subscribe button on the side here. I'm Hans Lysglimt. Thanks.